Hey, I'm Catherine, and thanks for joining me at Air Necessities, a podcast that turns complex financial topics into real talk for Gen X, Millennial, and Gen Z inheritors. Each episode of this podcast, I break down a different topic related to generational wealth and inheritance. My goal is that you can stop trying to figure out what to do with your money by asking Google or ChatGPT what to do, and come here instead for real talk, real solutions, and real advice that you can start implementing in your life today. On this week's episode of Air Necessities, we are diving into the annual gifting limit. And spoiler alert, this is one of the most common things that people with a lot of money, I'm talking tens or hundreds of millions of dollars, do not understand at all. I'm going to say 98% of the people who are insanely wealthy that I talk to do not understand the knowledge that I'm about to drop on you in this episode. You're going to want to hear it because if it's not directly relevant to you, it's absolutely something that you should be educating your parents about. Before I dive into it, if you have been enjoying Air Necessities and have 2 seconds to spare, I would so appreciate it if you could leave the podcast a 5-star rating wherever you listen to episodes. It's hugely helpful for the show, and it helps me connect with and support more inheritors just like you. Let's talk about what I hear all the time. A new client comes in. They could be talking about their parent making gifts to them, or they could be talking about making gifts to their kid. And I hear over and over and over again, I'm gifting my kids $19,000 a year, which is the maximum I am able to give. Again, I think 98% of families think that they are prohibited from giving more than that annual exemption limit, because if they do, someone is going to have to pay taxes on that gift. And for the vast, vast, vast majority of people, that is not the case. Let's back up to explain what that annual gift exemption is. It is an amount that any individual can give to any other individual without having to inform the government that they made that gift. So that annual exemption limit, it's not an annual exemption from taxes. It is an annual exemption from reporting those gifts, which are also not subject to taxes. But the exemption isn't talking about a tax threshold, it's talking about a reporting threshold. So I could give $19,000 a year to 5 different people, and I would not have to report any of those gifts to the IRS. If I gave $19,000 to 5 different people and then I gave $20,000 to the 6th person, I would have to report that gift to the IRS. But this is the key point here. There would not be any tax due because I gave more than the annual exemption amount. Every individual has what is called a lifetime gift tax exemption, and that amount is equal to the federal estate tax exemption. Right now, the individual gift tax exemption for a non-married person is right around $15 million. And if that person is married, then their spouse and them each get one, so that combined exemption becomes $30 million. In the scenario where I gave this 6th person a $20,000 gift, I do need to tell the IRS that I made that gift. But just telling them doesn't mean that I will pay any tax. What it means is that I file an informational return with the IRS telling them that I exceeded the annual gift exemption. And those annual returns, those informational returns, form the basis when I die of reducing my lifetime gift tax exemption, which again, right now is $15 million. So if your parents have a $10 million estate, or even if they're married, if they have a $20 million estate, they are most likely never going to have any gift tax consequences, even if they gave away all of their money, because again, their total estate, that $20 million, is under the current federal estate tax exemption of $30 million, which again is also the lifetime gift tax exemption. This concept is a little bit confusing and it's difficult to understand, but the core piece you need to know is that your parents, or you, if you are a parent, are not constrained to giving that annual exemption amount. There are many ways that you can give more than that amount, and in fact could give up to $15 million as an individual before there are any tax consequences to you. You do need to remember to tell your CPA about those gifts when it's time to file your taxes so that they can file that informational return and everything stays compliant with the IRS. But again, that's all it is. If I gave my best friend $3 million tomorrow, I would file an informational return with the IRS. It would be added to my tracking, added to my folder. I don't know if they have folders at the IRS. And that would be it. I wouldn't have to pay any tax. This is the first piece that you need to understand. The second piece is that there are ways to increase that annual exemption gift without going against that lifetime gifting maximum. And the best way that this can be done is for a married couple to elect to gift together. Again, this doesn't have any tax consequences. It does require, again, filing that same informational return with the IRS just to let them know, check the box that's saying, hey, we're electing to split our gifts as a married couple. And what that means is that your parents, for example, instead of giving you $19,000 a year, can give you $38,000 a year. So in effect, each of them, even though they're married, is giving you that $19,000. And say you're a family of 4, so you have 2 parents and 2 kids. Your parents could be giving each of you, your spouse, and each of the 2 kids, that $38,000. So now you're talking about almost $160,000 of giving in a year. Again, it does require filing that informational gift tax return, but there is no tax consequence. We've already talked about the fact that most gifts don't have a tax consequence. And B, even though your parents are giving your family almost $160,000 a year, it doesn't count against their lifetime gift and estate tax exemption because they're splitting gifts. So technically they're making under that annual maximum gift. Why does this matter? So many parents that I talk to or inheritors that I talk to when they are telling me about what their parents are doing in terms of gifting think that they are stuck at this annual exemption gift. And I think to some degree this annual exemption gift is helpful because when people are saying, how much should I give? Well, you can give this amount of money without telling the IRS anything, so start with that. But if your parents have expressed an interest in giving more and haven't because they don't want to deal with the tax consequences, they probably don't understand that there aren't actually any tax consequences. This is a huge misconception. And again, most of the people that I talk to don't understand this. So if your parents have expressed an interest in giving more, or if you are a parent and want to give your kid more money, want to give them more responsibility, maybe they're a young adult, you want to start them off with a trust to see how they do, you can do that. All of that is in your power. And it basically boils down to 2 things. Either 1, your estate isn't going to be $30 million, so the amount you give away doesn't matter. Or 2, your estate is going to be over $30 million, in which case you should absolutely be doing everything you can right now to get money out of it, and gifting is a huge piece of that. If you're a parent who's struggling to navigate this, or if you're a future inheritor who's struggling to navigate this with your parents right now, my goal is that you can just send them this episode, share a little bit of knowledge on annual giving. Because again, 99% of people don't understand this. But if you've made it to the end of this episode, now you do. Feel free to shoot me an email with any questions, Catherine@sunnybranchwealth.com. You can find me on Instagram @sunnybranchwealth. And if you're not ready to chat in real time yet, you can catch me on next week's episode of Air Necessities.